Welcome to the latest Motley Fool scoreboard. I'm Anand Chokkavelu, and we've got longtime fools Toby Bordelon and Rick Munarriz giving a 1 to 10 rating to the platform that claims over 80% of U.S. doctors. It's Doximity, ticker symbol DOCS. First, we'll rate the strength of Doximity's business, including factors like industry and competition. 10 is invincible. A 1 is hopeless. Rick's at a 7. Toby, you're the bull here at an 8.
Yeah, Doximity is what you might call a niche social network. They're focused on the medical space, focusing on medical professionals. And with that comes, of course, the power to generate advertising from people who want to sell specifically to that group, like drug makers. Doximity is hands down the dominant player in terms of professional networking in the medical industry. Their competition is all general in nature, and no one's really as focused as they are on the medical space, which gives them an edge there. The biggest issue I might see there, though, is that may be too limiting, right? Are they close to the point where growth is going to have to come from adding additional services, maybe getting more creative with monetization? At some point, right, you run out of medical professionals to add. But for now, so far, so good.
Yeah, so I went with a 7. So there are 610,000 unique providers using Doximity's clinical workflow tools, and engagement remains strong. Net revenue retention rate was 117% on a trailing 12-month basis. Net retention rate is basically existing customers 12 months later. How much more are they spending? 100 would be they're spending as much. 117% means they're spending 17% more. That's good for those following cloud companies. 120% is the ideal. This is important because the top 20 customers have a net revenue retention rate of 122%. 114 customers are generating at least $500,000 in subscription-based revenue for Doximity over the trailing 12 months. That's a 21% increase. Numbers are moving in the right directions, and this is important because the top tier, those that are spending at least $500,000 a year, account for 84% of its revenue.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Toby, both of you have 8s.
Yeah, this is a solid team here. CEO and co-founder Jeff Tagney has previous experience at Goldman Sachs. He's also a founder of a prior medical industry-focused app. So you got financial pedigree plus relevant industry experience. I think that's a great combo there. The other two co-founders, Sherry Buck and Dr. Nate Gross, they're both still around. They're active with the business. So that's great to see all three of them still working there. The employees seem happy. Management's done a great job of growing the business while keeping their customers engaged as well and happy. You look at this, it's a great situation all around, and I put that at the feet of management.
Yeah, the fact that all three co-founders are still Doximity 15 years after founding the company, that's rare, and I like that. At Tagney, he has a 93% employee approval rating on Glassdoor. That is very high, and 91% of those submitting reviews on Glassdoor would recommend working there to a friend. So quality culture, a quality team, I gave it an 8.
For financials, a 10 is a fortress, a 1 is yikes. Rick's at a 6. Toby, you're at a 7.
Yeah, I like this when I look at it. There's no long-term debt here. There's some earn-out liabilities that they've got related to a past acquisition, but that should end up being fine. Liquidity seems good, about under $1 billion in cash and short-term investments here. Revenue growth is good, increasing profitability, good discipline on cost control for them. Cash flow is positive. And the stock-based comp, you'd worry about that with a company like this, but it's not insane, relatively speaking. So all in all, I think they're in pretty good shape here. Not great, but they're in good shape.
Yeah, so I went with a 6. Revenue has decelerated sharply from fiscal 2021 when revenue soared 78%, admittedly not all organic revenue growth for that, down to 14% top-line growth in fiscal 2024. That's not just tapping the brakes. That's hitting it hard. However, revenue has accelerated in each of the last 3 quarters, in the first 3 quarters, of fiscal 2025. It was 25% year-over-year growth for the fiscal third quarter that ended in December, the last one it reported. Unfortunately, investors, they're looking at that brake pedal again instead of the windshield because Doximity's guidance calls for just 13% growth in the fiscal fourth quarter that ended in March, and we'll hear about soon. The market sees growth staying in the low teens and pre-teens for the next few quarters, so I'm not as impressed with the financials as others may be.
Rick, let's move on to valuation. How well will Doximity's stock do over the next 5 years? And how safe is it? 10's a sure thing, 1's a lottery ticket.
Yeah, I went with a 0% to 5% and a safety score of 7. Dox rocks until it locks clocks. To me, the stock isn't cheap. It's trading for 17 times its fiscal 2025 trailing its fiscal 2025 guidance and 32 times its adjusted EBITDA outlook. So this would be fine if Doximity was growing as fast as it was a couple years ago, but it's not. Like its ticker symbol, what it used to be, it's something that could use a checkup right now. I gave it a high safety score, though Doximity is profitable with a growing and engaged client base. It also has a cash-rich balance sheet, so the balance sheet looks good. Safety, it's not going anywhere, but I also think the stock might not be going anywhere too.
Yeah, I went with 5 to 10% here. The stock is around a double over the past year. I just don't think it's realistic to expect returns like that continually going forward. But I think you'll see a little bit of growth. Maybe not quite matching the market, but I think it'll do fairly well. On safety, I'm at a 6. I am concerned about the real size here of the addressable market. They've done a great job of growing the company, but how much more growth is there really to come? And can they keep their customer base satisfied in the face of increasing competition from some other telemedicine players here? So the competition looks like it's a little bit risky for me.
Let's move on to everyone's favorite topic. Rick, is there a company in Doximity's space that you like better?
Yeah, so if Doximity is the LinkedIn for doctors, as it was originally billed as, why not just own the parent company of LinkedIn itself, Microsoft? Microsoft doesn't have a medical-specific workflow management platform, but there's some overlap in Microsoft Teams and its Azure cloud hosting platform. Microsoft is also trading at a reasonable valuation than Doximity, despite also cranking out low double-digit revenue growth. Toby?
Yeah, I like Rick's pick here, and it's probably a good one in the context of social professional networking here. But let's not forget the dominant player in overall social networking, Meta Holdings. That's what I'm going to go with. Yeah, or Meta Platforms, rather. Facebook and Instagram are more social, recreational, and professional. It's true. But brands are still all over those networks. Advertising there is huge. Plus, if Zuckerberg's metaverse efforts end up working out, Meta could very well become the go-to place for professionals across multiple industries, including in telemedicine. There's a lot of potential there, depending on what they do with that.
Thanks to both Toby and to Rick. They've given Doximity a meh overall score of 6.5 out of 10, with low performance expected. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Take Two. Till then, full on. Does McDonald's really need to do salads? Because it doesn't matter. People who don't want to go to McDonald's aren't going to get a salad from McDonald's anyway. So,
I miss those McDonald's shakers. I'm sorry. I enjoyed the brief experiment into salads.